Hello and welcome to a brand new episode of Smart Money. Now, the India Energy Week 2024 was in focus, where India has invited investments from global leaders in the energy transition space. Prime Minister Narendra Modi said that India is investing in energy like never before to ensure affordable energy for the future. Remember, India is the world's third largest energy, oil and LPG consumer. India is also the fourth largest LNG importer and refiner, along with the fourth largest automobile market. The Prime Minister also underlined rising demand of electric vehicles in the country. Now, at the Energy Week, Prime Minister Modi said India will see $67 billion of investments in the gas sector in the next 5 to 6 years. So how do you as an investor take part in this large opportunity? To answer that question today, I'm joined by Raj Gandhi, who's the fund manager at SBI Mutual Fund, who's right here with me in the studio. Hi. And Ruchit Mehta, who's the head of research at SBI Mutual Fund, who's joining us on Zoom. Ruchit, thanks a lot for being with us. In fact, to both of you, this is a big theme, right, that the street is talking about. Stocks have done very well. So, Ruchit, let me start with you. Why is the energy theme looking so attractive from India's point of view? And what are the growth expectations of the energy sector over the longer term?
Sure. Thank you, Sonia, for having us on the show. I think if you look at the energy sector's demand prospects, right, this is a sector which over the coming decades will see an increase in demand from a consumption standpoint. There are two aspects, right? One is that increasingly over the last few years, we have worked as a nation towards enabling energy for all, which means having access to 24/7 electricity, having access to piped natural gas or LPG gas cylinders. And at the same time, we've seen that as income levels have gone up, consumers are upgrading their lifestyle, right? So, from having one gadget at home to multiple gadgets to, like, for example, it's quite the norm in large cities to have a house which is fully air conditioned with all gadgets that are there. Now, as you upgrade your lifestyle, you're going to require a lot of amount of energy. And therefore, we think that India is going to be a secular market from an energy demand growth standpoint over the coming decades. Now, there are third-party estimates which tell us that India's energy demand can continue to grow at a 2 to 3% rate annually for the next 3 odd decades. But within that, as we shift more towards the greener or the renewable side of energy basket, that can grow at a much faster pace of close to 6 to 7% as well. So I think for us, we're seeing that this is a sector which has very solid long-term growth prospects. And coupled with the fact that it's got reasonable valuations compared to where a lot of other sectors are in the market, it looks like an interesting investment opportunity.
Okay, it looks like an interesting investment opportunity. So, everyone's talking about new energy, right?
Sure.
The renewable energy, etc. But then there's old energy as well. So I wanted you to come in on it, Raj. What is old energy? What is new energy? And what do you exactly mean by transition?
So, largely old energy is somewhere where the carbon trail is much higher, the carbon footprint is much higher. And new energy is somewhere where, the carbon footprint is not there. So it's largely renewable sources like solar, like wind, hydro. And on the fossil fuel side, which is traditional energy, you have coal, oil. So, from a transition perspective, what it means is that we want to arrest the global warming, which is where, GHG emission, carbon emission needs to be brought down. And energy sector is amongst the major contributor to the carbon emission globally. So the transition essentially is that, you move from a carbon footprint fuel to a fuel with not much of carbon footprint. So that's essentially the energy transition that all of us are looking at.
So Ruchit, come in on this, right? Because this new energy space is something that everyone is very interested in, whether it is renewable energy, whether it is electric vehicles. And there are a lot of stocks under this umbrella as well. But we've seen these stocks run up quite a bit. So just explain to our viewer how, if you want to sort of take that decision to invest in new energy, which are the spaces where you still see value as well as growth opportunities?
In fact, it's quite interesting that a lot of hype has been there on the new energy side with a select set of small companies which are predominantly only on the new energy side or kind of almost like a startup. But we find it also interesting that actually it is the traditional old energy companies itself which are going to be either investing aggressively on the new energy side of it. because of their transition plans, or already are large players in the new energy side of the play. If you look at our solar power auctions that happen, right, regularly you will see traditional thermal power companies also participate and win these auctions equally as much as startups or pure dedicated firms are. So while yes, there are a bunch of new energy companies out there in the market, but we think it's a lot more interesting that you have the old energy companies also, which are aggressively ramping up on that side, and therefore they can be also over a medium to long term be a new energy firm itself.
Okay, that's interesting. But what are the risks that we're looking at, right? In terms of energy transition, there are incumbent companies, there are old energy companies that have put up a lot of plants, etc. So there will be, of course, that cost attached to it as they make that transition. So what are the risks that we're looking at, Raj?
So here, if you see globally, the expectation is by 2050, through 2050, there will be gradual decline in the oil and gas consumption. It will be taken over by renewables. So there is a risk from the absolute pie available to you coming off. But against that, what we see is let's say if oil consumption is expected to decline by 1.5–2% CAGR, but against that the natural decline of oil production is 3 to 4%. So some of these resources, even to just be where we are, we want to transition to net zero and not to stone age. So there is a kind of investment required here, and which is where there is pockets of opportunity available. Also, what happens is that for a commodity, what essentially matters is where you are on the cost curve. So for a lot of these traditional energy companies, the advantage they will have is India is most competitive on the new energy. So be it solar tariffs being just at 2.5 rupees. So on thermal itself, which is fossil fuel, today if you see for a new plant it requires 5.5–6 rupees. We have solar tariff at 2.5–3 rupees, which is amongst the lowest in the world. We'll have round the clock power, which will be, if you see the recent bids, just at 4.5. So what it does is that, when the entire fossil fuel basket has to move to net zero, they have to decarbonize. The cost essentially for the Indian companies will be the least. So you will have them move up the cost curve on the traditional business. On the refining side, let's say, in the traditional business, you require for every 100 units that you refine, you need about 3 to 4 units of hydrogen. And in the new energy era where you need green hydrogen, we are seeing the Ambanis of the world and talk of $1 per kg of hydrogen in India. So you have the cheapest delivered cost of hydrogen to you, which is where again, so across lot of sectors in a new transition world, you will see India moving up the cost curve, and which is where we see even the traditional energy being placed very favorably in such a scenario.
Okay, you were telling me that you've been tracking the oil and gas space for over, what, 18 years now?
Yeah.
We've seen a big boom in some of these oil marketing companies, right?
Sure.
Most of them are sitting at fresh highs. I want to understand the story there. I mean, is it, what is leading to this rally?
Sure.
And what do you see as the way forward for the sector?
Sure. So, what we are seeing here is that, versus the fear of them being bucketed as traditional energy and question mark on the profit pool. Some of them were pricing in negative growth, with low single digit PE there. So, what we are seeing quite conversely is, in fact, the profit pool is growing there because we are seeing reforms happening across the space. There is underinvestment across, like refining. If you see last 1 year, GRMs are double of what they are over 10 years. So there is underinvestment plus policy making resulting in growth in profitability, and the profitability is becoming much more predictable in terms of, let's say, ONGC historically had just $55 to $60 realization. It is now having 75. Subsidies were decided at the end of the year. Now you have every bi-weekly windfall taxes being there. So but there is a fair bit of certainty coming in there, and which is where, where you have growth combined with lesser and volatility, more predictability, you will have a market rewarding that. So which is what we are seeing. And in leg 2, which is where, we are quite excited on the fund, that leg 2 will happen when the fossil fuel energy money, which is, growing, is then put to use on the new energy side. So we've had NTPC say that, by 2032, they want their green energy portfolio to be equal to fossil fuel. So, which is where what you are seeing essentially the leg 2 of value creation, where you take benefit of new energy that India has and kind of transition your business out. And so that will also further enhance value.
Okay, well, let's do one thing. Let's take a short commercial break on that note. Don't go anywhere. We'll continue our discussion on how you can benefit from this huge energy transition that our country is seeing, and what are the companies, or rather the pockets, that you need to be looking at in your portfolio. More on that in a bit.